What you're seeing here is the distribution of Bitcoin mining pools. We currently have 3 pools that together represent more than 50% of global Bitcoin mining. And actually, 2 pools are almost at 50%. Look at this, Foundry USA and AntPool. So there is a very high level of centralization at the mining pool level. Now, of course, behind this pool, you still have individual miners, and those miners can switch at any time and move to another pool. But as long as they mine through a pool, until now, it was the pool that had control over which transactions were included in the blocks. So there was a significant censorship risk. You can easily imagine a state asking the mining pool to stop mining certain transaction or transaction going to a specific address. You can imagine many scenarios like that. And for a network that is supposed to be decentralized, having that level of concentration is a real problem. There's also the risk of 51% attack and so on, but even before going that far, we just having nearly 50% concentrated between 2 mining pools was a problem. But now a very important piece of news has just come out. Look at this. It concerns the Stratum protocol, more specifically Stratum V2. So what is Stratum V2 and what problem does it actually solve? It solves one of the biggest current problems in BTC. I'll explain everything in this video. We'll also talk about many other things, but first I want to start with this topic. Hello everyone and welcome to CryptoRed, the crypto news channel. So as I said, Stratum is an open source mining protocol that has been used for a very long time. Version 1 of Stratum has existed since 2012. But today I want to talk to you about version 2 because a huge number of mining pools have just joined the working group behind Stratum. And what does this version 2 make possible? I don't know if you realize how powerful this is. Stratum V2 allows the choice of which transactions are included in a block to be delegated not to the mining pool, but to the individual miners connected to that pool. In other words, miners will be able to choose whether or not to include a given transaction. So it will no longer be Foundry, AntPool, and NFTs deciding whether a specific transaction has the right to be included in a block. It will be the individual miner. And that solves a major risk. Not really a security issue risk in the strict sense, but a decentralization issue, a censorship resistance issue for Bitcoin transaction. And honestly, this is excellent news. Look at this. Around 75% of Bitcoin's hash rate has now joined the Stratum working group and is expected to implement Stratum V2. Look at the players now supporting Stratum. We're talking about 75%. Like I said, we have MARA, SpiderPool, F2 Pool, AntPool, Foundry. Via BTC is still missing. Binance is still missing. There are others still missing. But yeah, I imagine they may join gradually over time. In any case, this is a very positive development. And honestly, people are not talking enough about this news. It's excellent news for Bitcoin. While we wait for a broader solution to further decentralize the mining itself, we now have a solution that reduces the risk created by the current lack of decentralization among Bitcoin mining pools. So really, this is a good news. And as I said, Bitcoin miners still have power. I mean, the individual miners, they can migrate at any time. If they realize that Foundry USA, for example, starts censoring too much before implementing the Stratum V2, they could leave. Or if they see that Foundry USA get too close to 51%, then they could leave also. But with Stratum V2, we now have an additional layer of protection. But there is also a new risk. I believe it's a new risk. I'll give you my analysis. For my analysis, what we are doing here is giving miner the right to decide which transaction are included in the block, and this is what we call the block template. But what I think could happen is something similar to what we already see on Ethereum. On Ethereum, there are new actors whose role is to build blocks and decide which transaction are included, the most profitable transaction. And these are the block builders. There are many block builders, but on Ethereum, they are quite centralized. Look at this. Titan Builder and BuilderNet together, they represent more than 70% of the market share. And the risk on Bitcoin is if building blocks becomes too complex or if new opportunities appear, we could see specialized actors emerge. For example, imagine that decentralized finance grows on Bitcoin through L2s. Imagine more activity around ordinals. Imagine more complex transaction DEXs and other financial applications which are developed on Bitcoin. Well, this could change. Block construction could become more complex. And if it becomes more complex, individual miners may not want to handle it themselves. So they could delegate that work to specialized block builders. And then eventually we could see the emergence of centralized block builders on Bitcoin, similar to what happened on Ethereum. So Stratum V2 is clearly a very positive development. It reduces the censorship risk linked to mining pools. It gives more power back to individual miners, and it strengthens Bitcoin's decentralization. But at the same time, we need to monitor how this evolves. Because if the ecosystem becomes more complex and if block construction becomes specialized business, we could end up with a new form of centralization. Not necessarily at the mining pool level anymore, but at the block builder level. So the direction is very good. The news is excellent. But the long-term question remains, will Bitcoin manage to avoid the same block construction centralization that we already see on Ethereum? So yeah, we could see something different happen on Bitcoin, but for now, yeah, it's purely speculation. So yeah, like I said, I talked about it. What I wanted to say more, we have to watch what happens next, like I said. But yeah, for now, the key thing to remember is that this is excellent news for Bitcoin miners. And I have other news about Bitcoin. Let's talk about Strategy. Strategy is slowing down its purchases a little bit. They just bought 535 Bitcoin worth around $43 million. Honestly, the buying pattern is a bit strange. Sometimes we see purchases worth more than $1 billion, and then sometimes we see purchases of just $43 million, which is almost negligible for them. I think this is mainly about keeping the rhythm going and showing the market that they still believe in BTC, that they are still buying BTC, despite the recent comments from Michael Saylor that I talked about. He said that they could potentially sell Bitcoin to show the market that they are able to sell if needed. To pay interest, to the STRC holders. And another major crypto whale is slowing down its purchases. It's BitMine. BitMine is doing something similar to Strategy, but with Ethereum. They have also slowed down. They were buying around 100,000 ETH per week. Now, last week, they just bought 26,000 ETH. This was expected. I already made also a video about this. They said they were going to slow down the pace of purchases because if they had continued at the previous rhythm, they said they could have accumulated 5% of the Ethereum supply by June or July. So they decided to slow down a little bit. And remember, their target is 5% of all available Ethereum. But unlike BTC, Ethereum does not have a fixed maximum supply. It depends on its monetary policy. There is regular issuance. There is also burning. But BitMine's target is roughly 5% of the Ethereum supply. So they're going to move a bit slowly, and I think they will reach it, but maybe by the end of 2026. And since I talked about Ethereum. Let's talk about USDC. The stablecoin. The company behind USDC is Circle. Circle has just raised $222 million. But this fundraising is not exactly for this was not done issuing new shares. It was done issuing new tokens. The ARC token. Circle is preparing a blockchain called ARC, and there will be a token on that blockchain, the native token of the blockchain. They have raised this money from investors who wanted to buy that token. Among those investors, we have A16Z, one of the biggest names in crypto investing. There's also major players involved: BlackRock, Apollo, ARK Invest, Bullish, General Catalyst, and other companies who went through A16Z to make this purchase. So this is pretty huge. It shows that a lot of institutional investors have confidence in Circle and in this upcoming token of this new blockchain. And the valuation is massive. We're talking about $3 billion. This is huge. Once again, there have been no ICO, no public sale, no airdrop. Maybe something will happen later, but personally, I do not really think it will happen. The Circle seems to prefer raising money directly from institutional investors. So this blockchain should arrive soon. Personally, I struggle a bit with this kind of blockchain. A blockchain built around one single stablecoin bothers me a little. All these blockchains led by companies like Stripe with Tempo or the other companies, you have also Canto. If I remember correctly, I always forget the name Canton. Sorry, it's a blockchain led by different banks. So yeah, it's the same story. They are also raising money, but I'm not really a fan of this blockchain. I prefer blockchains that are genuinely decentralized, not blockchains tied to one company or to a small group of corporations. For me, the whole point is to have something controlled by everyone, not something controlled by just a small group of people. And there's also good news in the Aave. There's Aave also good news. This time it's regarding the kelp hack. If you remember, that impacted Aave, one of the leading DeFi app. The judge has now said that in the end, there is a legal path to recover the funds that were frozen on Arbitrum. So the $71 million should not remain blocked. That's a good thing because it means a vote, and the execution of that vote can move forward to recover those funds. So overall, the whole situation in Aave is finally moving in the right direction, and hopefully the money won't be stuck much longer there. And to finish, let's talk about something a bit lighter. Look at this. Do you remember the Bored Apes? Those NFT that were worth several $100,000 at one point? Well, they are starting to come back a little. These NFTs have climbed back to around 10 ETH, while not that long ago they were barely at 5 ETH. You can see it here on April, they were at 5 ETH, and now they are above 10 ETH. So yes, there is clearly a bit of a renewed interest around Bored Apes and around NFTs more generally. Now, are NFTs really going to come back the way they were before, during the bull run 2021, for example? Personally, I don't think so. I really think meme coins have taken the place NFTs had in this cycle. They are easier to trade, they are more liquid, and they still have that community aspect. You can still say, okay, I hold the Pengu coin. I'm part of the Pudgy Penguins community. So yeah, it's simpler, and in that sense, it's just a better tool. That doesn't mean NFTs are going to disappear. They haven't disappeared. They will be repriced, of course. The best NFTs will still be worth money. And I do think that in 10 or 20 years, some NFTs will still be worth a lot. For example, CryptoPunks. I really believe CryptoPunks will remain important because they had a real cultural impact. If we can, I don't know if we can call it that, but they had an impact. They were one of the first major NFT collections, one of the first profile pick NFT collection with 10,000 units, and something genuinely important happened with them. But when it comes to all the copies that came after, all the derivative projects and everything else, I think it gets much more complicated. And we have seen it clearly, most NFT projects have collapsed over time, just like most meme coins also end up collapsing over time. Anyway, that's my opinion on the subject, and that's it for today. I hope you enjoyed the video. I'll see you tomorrow for the next one. Bye-bye.